Okay, so welcome to ManFin Test 1 study session. And so Test 1 covers chapters 1 and 2. And chapter 1 is kind of an overview with a lot of concepts about the business or various forms of business organization, about the role of finance, the topics that we're going to cover in finance, how businesses are organized and set up, some management issues, just a lot of concepts. Most of the concepts, so there's 60 questions on test 1, and the first 17 are related to the financial statements, which is chapter 2. So that means 43 questions are concept questions, and most of those come from chapter 1, whereas the quantitative problems that will come from chapter 2, which are the financial statements. Okay? All right, so what I have here is a list of accounting line items. And what I want to do is to build an income statement, a balance sheet for 2014 and 2015, and then build a cash flow statement for 2015. So remember, you need 2 balance sheets and 1 income statement to do a cash flow statement. Okay? So what we're going to have to do then is rearrange these line items to create our income statement and our balance sheet. Okay? So let me see how far over. Would you mind looking to see how far over I can go? Right here? Can you see this line right here? Is that right at the edge, kind of?
I mean, you can go probably.
I'd go a little farther.
Yeah.
How about?
That's the edge.
Okay, that's the edge. All right, so let's do an income statement first. Okay, and we'll do 2014 and 2015. Okay, and so we'll start with sales, cost of goods sold, gross profit, SG&A, depreciation, EBIT, interest, pre-tax income, taxes, and net income. That is the template for the income statement. So we're going to look through these line items and we're going to put them in the correct order. So we'll start with sales, and we see 190, 199. So it looks like we're going to have to move this 2015 over just a bit, give ourselves some space. Okay, and cost of goods sold, 96,952. All right, so my trusty assistant here is going to, let's see, we got 7 and 4, and 11 minus 9 is 2, and 10, 9 minus 6 is 3, 9, 8, 18 minus 9 is 9, so it looks like 93,247 is our gross profit. All right, so that's sales minus cost of goods sold equals gross profit, and you'll notice that gross profit is not listed as a line item. You just have to know that sales minus cost of goods sold equals gross profit. Now we've got SG&A of 19,067, and we have depreciation expense of 27,370. Okay, so we're going to subtract SG&A and depreciation from our gross profit. So my trusty assistant will do that. And we have EBIT, earnings before interest and taxes, or operating income or operating profit, of
46,810.
what is that?
46,810.
810, 46,810. Thank you. And then we have interest expense, and let's see, it is 5950. Okay, so we subtract interest expense from that. We have 0, 6, and 17 minus 9 is 8, and 16, no, 15 minus 5 is 0. Is that right? No, it's 40,860.
Yeah.
40,860, right? Okay, subtract interest expense from EBIT, and we get pre-tax income. Our tax rate is 30%. So we're going to multiply 40,860 by 0.3.
It is 12,258.
Okay, that's our taxes. Subtract our taxes from our pre-tax income.
Sorry.
$28,602. So that is our net income for 2014. All right, so now we're going to do the same thing for 2015. So we'll look at sales, 231,840. And our cost of goods sold, 122,418. So sales minus the cost of goods sold, $109,422. Our SG&A, 24,886. Our depreciation expense, 21,137. And we come up with our EBIT. So gross profit less SG&A less depreciation equals EBIT. So what's our EBIT?
Sorry.
That's okay. You need to clear the calculator.
It is 63,399.
63,399. Okay. Now we'll take our interest expense out, which is 6820. That's 9, 7, 13 minus 8 is 5, 3, 12 minus 6 is 6, 56,579. Is that right? Okay. Is that looking good?
That's
Okay.
correct.
Now we'll multiply that by 0.3 to get our taxes.
16,973.
$39,606. All right. Now we'll do a balance sheet. So to make room, we need net income. So we're going to write this right here. Net income, which is 39,606. And depreciation of 21,137. I think that's all we need from the income statement to do our, but that's what the income statement looks like for these 2 years. And that's all we need for our cash flow statement. All right, so let's erase our income statement. And we'll do a balance sheet. All right. So, Bring this up a little bit. All right. So we'll start with assets. And we have current assets, and that's going to be cash, accounts receivable, inventory, and total current assets. Then we'll have net fixed assets, and we have total assets. Okay? Then we have liabilities. I'm trying to think of the best way to set this up. We can move it over here. We're going to be putting in 2 years' worth. Just a little bit. All right. So we have the balance sheet up here. All right, and so we have 14 and 15, and we have 14 and 15. Okay, so for liabilities, we have accounts payable, and we have current portion of notes payable, and we have total current liabilities. Then we have long-term debt. Then we have total liabilities. Then we have contributed capital. Then we have retained earnings. Then we have total owner's equity. Okay? I have to move this out just a little bit. 14 and 15. All right. So let's get this going. Cash, $13,990. And 40,530. So it's all about arranging this in the proper order. Accounts receivable, 9913. And 12,859. Inventory, 20,861. And 28,628. Let's move this down a little bit. So we have total current assets, net fixed assets, and total assets. All right, so we're going to add up our current assets. So 3 and 1 is 4, 10, 16, 10, 19 and 8 is 27, 2 and 3 is 5, 5 and 9 is 14, so 1 there, 1 and 1 is 2, 2 and 2 is 4. Check my math trusty assistant there, thank you. All right, let's add these up. 17, have you already done it? No? Okay, 3 and 5 is 8, 2 is 10, 1, 5, 6 and 8. Is 14, is 20, 2 and 2 is 4, 4 and 8 is 12, 1 and 4 is 5, 5 and 1 is 6, 6 and 2 is 8. Hope I got that right. Yep, looks right to me.
It's 17.
Right here,
Mm-hmm. Yes, sir.
3 and 5 is, oh, you're right. Thank you. All right. Now let's look at our net fixed assets. 120,750. And 147,115. All right, so let's add these up. Get our total assets. So we have 4, 11, 8 and 7 is 15, 1 and 4 is 5, 4 and 2 is 6, 165, 514. And then 7 and 5 is 12, 1 and 1 is 2, and 1 is 3, 1, 2 and 7 is 9, 8 and 4 is 12, 229, 132. Well, wait a minute. Oh, why did I do it that way? I made a mistake there. Sorry about that. No, I'm good.
You're
I'm
right.
good. I'm good. All right. Now, let's look at our liability section. So accounts payable, 24,725. And 28,003. All right, current portion of notes payable is 11,270. And 12,305. All right, so total current liabilities, 5, 9, 9, 5, 3, and 8, 0, 3, 0, 4. Okay, total current liabilities. Now we have total current assets and total current liabilities. We could subtract total current liabilities from total current assets, and we could do working capital. All right, a long-term debt, $60,950. And $70,150. Okay. So let's add up our total liabilities. Should move that over a little bit. So we have 5, 4, 9, 6, 9. That's right. And we've got 8, 5, 1, nope, 4, and 0, and 11, 110. Yeah, that looks about right. All right, now we need contributed capital. So now we have total assets and total liabilities. And so we could subtract total liabilities from total assets and we could get total owner's equity. Yes? Something look wrong?
Yeah, I just have to go soon.
Do what?
I just have to leave soon.
Oh, okay. All right. So, yeah, I'll continue on. But so let's go ahead and do the contributed capital. And so that's 10,000. And it's 22,000. Thank you. All right, then we have retained earnings, 58,569, and 96,674. All right, and so total owner's equity, 68,569. And let's see, 4, 7, 6, 8, and 118,674. Okay? So then, let's add this up. Total liabilities plus 96, 945. Let's add this up. That's 4, 0, 5, 5, 6. 165. Oh, I'm missing one. Yeah, 7. There it is. Okay. So, total owner's equity plus total liabilities is equal to total assets. Same thing here. So we've got total owner's equity here, and we have total liabilities here. So let's take total liabilities. 4 and 8 is 12, 8 and 5 is 13, 1 and 6 and 7, 4 is 11, 9, 2, 2, and so total liabilities plus total owner's equity matches up with total assets there. So we know we are good there. Okay? All right, now let's do our statement of cash flows. Okay? See if we have room. Hopefully we'll have room. All right. So we have our statement of cash flows. And let's start with cash flow from operations. Okay? That's going to be net income. And so net income is $39,606. And depreciation. And depreciation is $21,137. So this is for 2015. Can't do one for 2014 because we need a 2013 balance sheet. We don't have one. So we'll call this cash flow from operating activities. And that's 13. 1 and 3 is 4. 6 and 1 is 7. 10, 1, 3 is 4, 2. So $60,743 generated by operating activities. Now we have the change in non-cash working capital, and that is the change in accounts receivable, the change in inventory, the change in accounts payable, and the change in the current portion of notes payable. Okay? So, accounts receivable, the change in accounts receivable, ending minus beginning. Let me get my calculator here. And let's do some ciphering. So the change in accounts receivable is $12,859 minus $99,13. And that's $29,46. So accounts receivable ending was higher than beginning, which means the asset went up. Assets go up, cash goes down. Remember, assets and cash move in opposite direction. Liabilities and cash move in the same direction. Inventory, $28,628. Ending minus beginning, $28,861. $77,67. The asset went up, inventory went up, ending was higher than beginning. This is a use or a negative for cash. Now, accounts payable. Ending minus beginning, 28,003 minus 24,725 is 3278. Okay? The liability went up, cash went up. Source of cash. Change in current portion of notes payable. Got a little squeezed here. Let's move this down just a little bit. Change in accounts payable. Change in current portion of notes payable. All right, so current portion of notes payable, 12,305 minus 11,270 is 1035. So once again,